chart-wise, technically, and commitment of traders reasons, I think you've probably seen the worst. How can you stay bullish? Well, if you look at what's overvalued and undervalued.
Hi, everyone. Welcome back to Wall Street Silver. Our guest today is our good friend, the legend, the silver guru, David Morgan from the Morgan Report. Great to see you again.
Good to see you, Ivan and Jim. Thank you for inviting me.
Absolutely.
Hey, so Mr. Guru of Silver, obviously we have to ask you about the silver chart, and it has not been pretty lately. So I hate to put you on the spot, buddy, but what the heck is this?
Yeah, well, I'm actually pretty friendly with Ed Steer. I mean, I've known Ed for a very, very long time, well before he started writing for Doug Casey. And then after that few years, he branched out on his own, and he does a daily update. And he keeps going. I think the last three were 8 days in a row, 9 days in a row, and today's missive was 10 days in a row. So highly unusual to see that many in a row. And I would say the 2150 is kind of the magic number here, Jim. We've bounced off that level a couple times. And as I've often said in the commodity sector in general, 3 times is a charm. So usually on the third time, we're going to know, which means does it hit 2150 or thereabouts and bounces up? Or if it breaks through 2150, then we are in a situation where it could go to 18. One of our premium members asked me a few months back, how bad could it get? And I showed the chart and I said, could get to 18. I don't think it will. I think 2150 will hold. A couple of reasons why. One is 10 days in a row. Secondly, the commitment of traders has improved dramatically from the last report. I think it's something around 72,000 contracts have left from the open interest. And the selling that we saw Friday and Monday would add to that. So more stops for run, more people got margin calls, more people bailed out. So it probably lowered the open interest. So I think commitment of traders wise, we're pretty close to the bottom as well. So chart wise, technically, and commitment of traders reasons, I think you've probably seen the worst. How can you stay bullish? Well, if you look at what's overvalued and undervalued, and a big money knows this. I mean, the sector is so undervalued, especially silver, that there will be some allocations coming in. What was really surprising, Jim and Ivan, was getting the silver survey this year from the Silver Institute. The retail demand on silver was probably as high as it's ever been. Somewhere, I'm doing some memory, somewhere around 270 million ounces. But in 2020, we set a record because the institutions came in at 320 million ounces. Last year, the institutions basically begged off. They hardly bought any. I think the number was 65 million. So that's where the big change was year over year. 2020, massive institutional buying. 2021, hardly any, relatively speaking. And when the institutions run into gold, they will spill over into silver, and that's what's going to take us higher.
The other big news recently that we probably need to address is the negative GDP numbers that have been popping up. Surprising to the mainstream media. It was surprising. We've been sort of expecting this for a while with all the things that have been happening. Negative 1.4%. That was a huge surprise. I think they were expecting positive 1%. And it sort of gives you some pause to wonder how can the Fed really keep raising rates with a negative 1.4% number? It's like they got to choose, right? Are they going to fight inflation or save the economy? This is the trap. It's now perfectly clear.
Well said, Jim. You're right. I mean, I can't say it's a recession, although it is. It's just basis what the mainstream or what the proponents say is it's got to be 2 quarters in a row. So that means we've got to wait another 3 months, and then a month after get the report. And then if it's negative, oh my goodness, we're in a recession. Well, we're in a recession. We're in a huge contraction in the economy globally. and it will come out next quarter that we're in a recession.
Yeah.
And the question you asked, will the Fed be able to continue to increase interest rates if and only if they really want to destroy the economy? And I can't rule that out of my thinking entirely. If we go basis past history, they're going to make a U-turn and quit tightening and ease whatever little bit that they can. But if they are really in the mode of this reset thinking and they want to just basically take the dollar to oblivion, it could happen. That's not the way I'm leaning, Jim and Ivan, but it is possible. How much? Don't know, probably less than 5% possibility, but I won't rule it out. And lastly, the bond vigilantes can get ahead of this whole thing. I mean, the Fed really is reactive to the markets. It really doesn't lead, although they like you to believe they. So if the markets go pretty cuckoo crazy and the stock market really starts diving, everything indicates they'll back off, they'll ease, and they won't tighten.
Yeah. If the Fed were to pivot or even to signal that, all right now everyone's pricing in 8 or 9 more rate hikes for the rest of this year, I don't think they're going to get there. I mean, I don't know how, especially if there's another GDP print. I mean, we probably have two more the Fed meeting that's going on this week, or they just announced, and probably one more before we get that second GDP number that we're officially in a recession. I mean, how do they keep raising unless he wants to become Paul Volcker, right? Saying, I don't care what we do to the economy. I'm killing inflation. And I don't know if he has the same mandate that Volcker had to be that brutal right before the 2022 election, the midterm elections. I mean,
let's examine that a bit further, because you make an excellent point, Jim. I mean, basically it could be ratchet the rates higher and higher and higher. What will that do? That will save the dollar. That's what it will do. If they back off, basically they're submitting to the fact that the dollar is a fiat Ponzi scheme, fiat fiesta Ponzi scheme, and all fiats fail. And if they back off, as we both expect them to do, then that signals to the markets in general that they're not going to defend the dollar, spend it fast. We're going into a inflationary situation. Not, I wouldn't say hyperinflationary, but certainly the dollar.
If 20 or 30% inflation pretty much destroys the economy pretty damn fast.
Yeah,
you don't need hyperinflation to do that, right?
Exactly, and that's been my contention all the way up, is that we don't need Zimbabwe type inflation to destroy the economy.